Well, good morning, everyone. Today is Thursday, the 26th of September. It's about 8:11 in the morning. The market's going to open up in about an hour, 19 minutes or so. Big days today for fundamental data and earnings. Let me give you the full briefing so you guys know what's going on, what to expect, and what you can gain from today's trading action. We have GDP and employment numbers. I don't think that the GDP is going to have much of an influence, and I'll explain to you why. We already know consumer confidence is not doing so well. We had the report earlier today. If GDP is slightly lower than 2%, the expectations is 2%. If the number is slightly below 2% and the economy is showing signs of slowing down, then the Fed is justified in what they already did, which is lowering rates. That's kind of priced into the market. And if the market's doing 2% or better growth on the GDP, on the quarterly GDP, well, then the bond market is justified in staying where it is because there's a trade war. So my point is, because interest rates are near historic lows and stocks are near 52-week highs, it's not going to make that much of a difference if the GDP is slightly below average, but like 1.8, 1.9, or 2.1. It's really not going to make that much of a difference beyond today or tomorrow. We may see some short-term volatility, but I'm not seeing any major discord or anything because I think everything is priced in where it should be, and I don't think we're due for any surprises. So 1.9, 2.0, 2.1, don't expect anything major from the bond market or the stock market based on that. Now, excuse me, this is a chart, this is a table of the S&P 500 divided into 10 major sectors. I know. Some of you say there's 11 sectors. There's that internet or telecommunication sector. I just put that into technology, okay? Because it is technology. I want to point out something really rare. Utilities are leading, but look at number 2, it's technology. You're seeing the most defensive sector and the most offensive sector next to each other. Why is this rare? Why is this uncommon? Why do we need to talk about this? Because typically when you see utilities all the way on top, you see technology all the way on the bottom. Usually utilities will lead and tech and consumer discretionary will be all the way at the bottom. Or when this consumer discretionary or technology leads, those are very speculative sectors. Utilities is usually at the bottom and consumer staples is usually at the bottom. We rarely have periods where utilities and technology are next to each other. It's not very common. So the markets are defensive. Now let's talk about that a little bit more. The S&P touched the 50-day moving average twice. We didn't close on it. We closed above both days, but we touched it twice. That's not good. In order for me to become bullish once again, I need to see price trade completely above the 50-day line 2 days straight. Till I see that, no soup. And based on what I'm seeing on the trading action, there's a good chance we'll go a little lower. Now, today's big earnings is Micron. They're reporting after the close. Micron is one of the top 5 biggest semiconductor stocks. Why is it important? Why is it relevant? Well, several reasons. China-US trade war has a major impact on the stock. However, the stock has gained 28% over the last quarter, whereas the typical average climb is about 11%. So this stock is on a climb. It's on a tear right now. And notice it's above the 50-day line. It's almost near all-time highs, whereas the broad market is touching the 50-day. So it's outperforming the broad market. Also, this is the semiconductor index. This tracks all the major semiconductor stocks, including Micron. Notice it's also weaker. It's touching the 50-day line as well. It's actually mimicking the S&P 500. Look at that. They're almost identical. That's not common. Typically, speculative stocks like semiconductor stocks outperform the S&P 500 in a bull run when S&P is near all-time highs. But again, we have this trade war right now, which is causing a lot of issues. I'm expecting Micron earnings to be mixed. I don't expecting anybody to come out and say Micron is going to kill it. I think the news is going to be bullish, optimistic, but cautious. Cautious because there hasn't been any resolution with the trade war. And I know Trump is saying we're going to have one, but we don't have one yet, and it's starting to be like the boy who cried wolf. And again, it's not his fault, but again, there's just not much movement between China and Trump. All right, expect better than expected earnings on Micron, by a slight margin. That may propel the semiconductor index higher. Overall, expect more stagnation and sideways trading action from the overall market. And I don't believe the GDP is going to impact anything too much unless the numbers are totally out of whack, and I'm not seeing it. Anything between 1.9 and 2.1 should be a medium sideways, more volatility, but not that much more directional bias. The stock market looks mildly weaker right now. It looks not bearish, not bullish, but it looks like it's ready to move sideways and possibly a little bit lower. Keep your eye out on earnings for the next few weeks. We have some other big companies trickle in, like Rite Aid, Conagra, a couple of others, Carnival Cruise Lines, but the majority of earnings will start the week following next with big bank stocks. So this is just a prelude to the big event. I'll talk to you guys later. Keep your eye on Micron. If Micron is doing really bad, it'll push the semiconductors lower, and we'll see a few days of weakness. If Micron is positive, it'll push the entire semiconductor sector higher, and we can expect a little more upside. Again, keep in mind the dynamics of what we're talking about. If you guys are enjoying this, if you're getting something out of it, send me an email, support@marketgeeks.com, or comment on the video. Talk soon.